All right, guys, so let's talk about the 5 elements of accounting that every business owner, student, or even financial enthusiast needs to know. If you want to truly understand how money flows in and out of your business, these are the building blocks, the 5 key elements of accounting. Let's dive in with the basics, and trust me, it's not as complicated as it sounds. So the first is assets. First up, assets can be defined as an economic resource within the control of an entity that is capable of yielding future economic benefits. These are the things a company owns that have value, such as cash, equipment, inventory, or even intellectual properties like patents. Assets are what you use to generate revenue and helps your business grow. Basically, anything your business owns that is worth something, whether it's cash in the bank, a building, or even your company's computer system, all represent assets. So let's talk of liabilities. Up next, liabilities are debts or obligations your company owns, such as loans, account payables, bills that you need to pay. Think of them as the opposite of assets. So liabilities are those things that your business is obligated to pay in the future. The bigger the liabilities, the more careful you need to be in managing them. So the third is equity. Equity represents what is left over after subtracting your liabilities from your assets. Is the ownership value, basically how much your business is really worth after all the debts are paid. Think of equities like the value of your business after you've taken care of all the bills, like the home equity you might have after paying off your mortgage. That's the real value. So up next, we talk of revenue. This is the money your company makes from selling goods or services. Revenue is also called sales or income. Basically, all the cash coming into your business. Revenue is a fuel from your business engine. The higher your revenue, the more you need to invest in growing your company. So finally, we talk of expenses. Expenses are the cost of running your business, like rent, utilities, salaries, or even materials you use to create your products. Expenses are what it takes to keep the lights on and your business moving. Expenses are necessary, but the goal is to keep them lower than your revenue. If your expenses are higher, it can eat up your profits. But if you manage them well, you will see your business thrive. All right, guys, here's the accounting equation. Assets equal to liabilities plus equity. What are assets? Assets is what you own. For example, cash or building. Liability is what you owe. Example, loans. Equity is what is left after paying what you owe. Example, retained earnings. What are retained earnings? Retained earnings is what is left after the business pays its shareholders dividend. You know, when a company makes profit, the profit is shared into dividend and retained earnings. So a portion is paid to shareholders who are the owners of the business as what? Dividend, while the remaining is retained earnings. So there you have it, the 5 elements of accounting, which includes assets, liabilities, equities, revenue, and expenses. Master this and you will be well on your way to understanding how any business runs financially. If you find this video helpful, don't forget to like and subscribe for more accounting tips. See you in the next video.